It's all good.
All right, I'm here with Akeel Jabber from Horizen Ventures. I'm super excited for this. We haven't caught up in a while, man. How you been?
I've been good, man. It's a pleasure to be on. Great to chat with you again. Glad we can catch up.
You as well. Well, so
Yeah.
for people that may not know of Horizon, do you want to give just a brief background around what you guys do? Just maybe the 60-second quick pitch.
Yeah, sounds good. So Horizon Capital, we invest, B2B SaaS companies. We do acquisitions, we do investments, of all sizes, generally somewhere between 500K to 5 million in ARR, B2B only. And, our portfolio now, we have about 5 companies active and, act slowly doing deals as they come through.
Nice. Well,
Yeah.
progress, man. Like it.
This, yeah.
Um, so I guess my next question would be, you look at a lot of deals per month, I'm guessing. And so,
Mhm.
as you look at these potential startup acquisitions, how do you evaluate startups that you're looking to acquire?
Yeah, sure. So we start with high level filter. So this is our first criteria we look at. So what are the companies doing between, like I said, 500K to 5 million in ARR? We'll look at growth. So potential zero, look at flat line up to 30% growth. So we don't like these super high growth companies, and we're not competing with VC money or capital investments. We like profitable or at least break even. So we don't want anything that's burning. If you're burning capital, we're not going to invest in you. And then the other criteria is, we're looking at monthly churn of less than 3% and LTV of at least 1,500. So that's the first step. If we're happy with that, then we go into the next stage, which is, all right, now we look at whether we think, when we look at this company, can we make a significant impact to actually grow this company, like apply our playbook and make a difference and make it worthwhile of an investment. So we'll look at things like your website, their analytics and their competitors, look at their sales and kind of marketing process, and then assess kind of quick wins. What are some quick wins we can do and improve within like the first 3 months, the first 6 months? If we feel we can add value, we build a plan, we'll go deeper into an audit, and then we'll deep dive into like different fundamentals. So like your customers, your competition, the different sales channels, your marketing channels, kind of break it down and see what's working, what isn't. And then, management, let's look at the management, the market, the money, so the actual financials of it, the product, the projection, partners, like, who are the different partners? Do you have affiliates? Do you have resellers? The actual technology, the transaction terms. What is the actual, like, what are they looking for? Is it, worth kind of what we think it is? And then what is the risks around all this? So we'll take all these different factors, we'll plug it into a scorecard. And then that'll kind of give us an idea of like, all right, is this, what are some red flags here? What are some areas we need to improve? And what we think based off that, like, what do we think it's worth at this point and whether we want to move forward?
Nice. That's quite a detailed answer. I guess one side question I have based on that is what are some like big red flags? And this kind of ties into my next question of like, with us going into 2022, a lot of founders are looking to sell their businesses. I'd love to hear just like your top two tips for founders looking to position their companies for an acquisition, and maybe like red flags that you come across commonly.
Okay, so I'll start with red flags. I guess red flags, market. So is this like a declining market, and even their company, right? They like declining. I mean, that'll be a thing. Was like, all right, something's going on here. Like these founders are smart. Like they've built this thing to a solid place for a reason. They know what they're doing. But something's going on here, so we'll kind of red flag that and see what's happening there. And then from partners and customer concentration. So we don't like, or even in the marketing channel. So 3 things, like those things are pretty intertied. Where if like 30% of your traffic comes from one keyword, if 30% of your customer represents like 30% of your, sorry, one customer represents 30% of your revenue, or a lot of these things where like there's a lot of risk on one small thing that could go wrong.
Yeah, you
Those
lose one of those, you lose like 30% of the revenue.
exactly, like, oh, you're scrambling how to figure that out, right?
Yeah.
Get that back. Yeah. And then tips kind of for founders going into the next year. I guess first thing, if you're looking to sell, like clean up your financials and reporting. Like if you have clean, reliable, well presented data, I think that's just like confidence to any buyer. Like, okay, this guy knows what's up. He knows, he has his stuff in order. Has nothing to hide. I think that's the image it shows. And then before going into like a sale, like kind of figure out your priorities. Like, do you want to get as much guaranteed payment up front for your company, or is this like, all right, this is the total potential consideration important to you? Other questions we get are like, is the legacy of your business important for you? Is the future of your staff important to you? Do you care if they stay or they're gone? Are they going to move on with you? Do you still want to work with the company post-transaction, or are you looking just like, get this off your plate, move on, or retire and live in Cabo? And then
where I just got back from.
Exactly. Why
You don't want to live in Cabo, or maybe you do.
It like a couple of weeks, yeah. And then being clear with yourself on like what your priorities are, to help you target, who you want to approach and pitch, be more consistent. So I think it just, have your number in mind. I think let's be clear with yourselves. Like, if I like that set point is like, if I sell at this number or I don't sell at all, like just think through that situation. I think, you've been through that. I was like, yeah, you're kind of close. Like, this is a number, I might take it, but then there's one's like, this is a great deal. I'm taking this. I don't, this is way better than I thought. Right. So, and if not, it's like, okay, be willing to walk away and just like continue running your business. Right.
Yeah, I like that a lot, especially just I think so many founders underestimate just the importance of a clean 3-year P&L that just gives you like a good, healthy financial snapshot of the business, because it shows they have, their books in order too, they've prepared in advance. And all that can really, give good signals to buyers that like they're serious about doing an acquisition rather than just like, here's kind of like my Stripe stuff, you figure it out. So the more they can make your lives easier, the higher their chances of being acquired.
I wonder from your perspective on like MicroAcquire, do you see that like the ones who come in prepared with like everything, like the process just moves a lot quicker, I'm guessing, than the ones who
Oh yeah. If you have like a data room set up, you have a clean P&L, you have metrics attached or connected. It just makes the buyer's decision that much easier. But more importantly, it signals to buyers that you understand, the acquisition process. You're looking to sell the business, and just the difference between having all that and then compared that to, let's say, an equal startup without those, things, unless that other startup is growing like 4 times faster. Buyers are going to gravitate towards the one where that, there's clear signals that this is a serious seller, and they're looking to do a deal and they know what buyers are looking for to make that decision.
Exactly.
So absolutely. So my next question would just be your favorite acquisition story. That's going to be partial buyout. It could be a full buyout. It could be one you've heard about.
I heard about. Maybe I don't follow other people's stories as deeply, but I'm sure there's a ton of those cool ones. But maybe too, like, so $99 Social was my first kind of bigger, like 6-figure, I think 7-figure acquisition. When you talk about risk, people looking at that P&L, when it comes to investing, there's just, risk, understanding your risk from like a micro and macro level, and then emotions, and being able to tie that together, right? And I think people think, if I want to start a micro PE firm, you have to, get right in and buy this big company. I think is like, build yourself up slowly. Just start investing and like understand if you know what you're doing. Unless you're like really, really good at marrying those two together. And I think it just takes time and experience. So $99 Social was the first kind of bigger one that, over many different investors, that one came out. Bought that one, was able to like double it within like 5 months.
Wow.
Yeah, so that one, did really well. And then, and then, kind of started building up from there, right? From there, we went to bigger deals, and that's kind of where we got today. So I don't think you have to start, really big, start small, like start in the stock market, start in real estate, whatever. But like that emotional of like understanding risk and then how to manage it with your emotions, I think is probably more important.
Nice. That's great advice. I always recommend, for those, looking to get into acquisitions, like starting small and learning, like even just going through the motions, even if it's a very small, it's called like a 20K deal, treat it like a larger deal. So when you do get to that point,
my first deal was 2014. I think it was like a 50K like content site. And that's where like it really started. It was like, oh, this is actually real. You can actually make money online. And then, it moves up from there.
Yeah. And you just learn as you go. And then the next thing you know, the only difference is you're adding 0 at the end of the deal.
Basically. Yeah, more or less. Yeah.
Right on. Well, I guess, my last question would just be, so last year we had a record year in terms of just private equity activity, acquisitions, everything was just kind of on fire. What do you think we're going to see in this next year? Good times, maybe a return to, normal, bad times, better times. something else? Like if you had to just kind of predict where we're going to be at the end of the year, where do you think we're
So
going to be?
yeah, what's happening? We're getting to like post-COVID. We got inflation rising. We have now the Ukraine-Russia war in Europe, and what's happening is we're seeing like the valuation in publicly traded SaaS companies starting to drop. So I think like midterm, like I think
Yeah,
VC.
and one thing I'll point out too, and you're completely right about this. And sorry to interrupt. I just had
No, go ahead.
I read this today. Public market SaaS companies were traditionally trading at 20x annual recurring revenue. Now they're on average trading at 8x. So they've gone from 20 to 8x in a period of, so things move fast in terms of like, we could see another quick spike up. But sorry, continue.
No, and that's so I think like midterm, you also see even not just like buyers, but VCs, investors will also be like more risk averse. So I wouldn't be surprised if like some of those high growth, cash burning startups like rely on constantly new rounds to survive will maybe soon struggle to find new investors, and either they're going to go bankrupt or they're going to have to find a buyer. So I think what we'll see going forward is like more struggling SaaS companies, and I think for you and for us, that creates more opportunities to like find these like distressed SaaS businesses. But also, I think the valuation of like the SaaS is just going to be more reasonable. I think, like you said, 2021 was just, ludicrous. That like all professionals, VCs and everybody kind of in the space was like, what's going on? But I think it'll come back. And I think another thing we'll mention is like that maybe we're not used to hearing is like there's going to be a switch of mentality into like ARR growth will not be like the only sole purpose of the business, and it won't be like the measure of success. There's other things, right? Like the impact of the business. And I think even investors will switch their focus on like high growth, high risk speculative play to like, hey, maybe let's find more of these like stable, reliable investment SaaS companies that are like growing organically and profitably, which is why we're here and why we're in business. So I think there'll be more of us kind of popping up and like VCs moving into this space as well.
I agree with pretty much everything you're saying. That's a great answer. So I got three last questions for you, and these are kind of the rapid fire ones.
Right.
So if you could just look at one metric when you're looking to acquire a company, what would it be?
The one that scares me and also excites me is churn.
I knew you were going to say that. Yeah.
You know it, right? Yeah. I don't say growth, it's churn for sure.
Churn. Okay.
Yeah.
And then who's an entrepreneur that you look up to?
Is that specifically like SaaS or any?
It could be any entrepreneur. It could be any
like,
business person. Just
I think more like well-rounded overall. Who I like to follow the space, probably like more like Tim Ferriss.
Nice.
Tapping it from all angles. Yeah.
Good answer. Yeah, he's definitely in like the top 10, I think, across everyone's list.
Yeah.
Sure. And then final question. For those like looking to, learn about acquisitions or, they want to enter entrepreneurship through acquisitions, what's like a podcast or like one book that you would just absolutely like recommend they check out? Besides your podcast.
I was going to say, shameless plug.
No, plug your podcast.
No, I'm kidding. Yeah, SaaS District's cool. If you want to know what SaaS.
It's a good podcast. SaaS District. Definitely check it out.
Yeah, definitely. Book-wise, I mean, I like Good to Great. I think that one's good I think like everybody has to read that book by Jim Collins.
Nice. Jim Collins. That's actually one of my favorite books. It's actually sitting right next to me.
Really? He's on my top 10 list entrepreneurs too. So he was close to Tim. So
yeah, he's got a couple other really, really good books to check out. I can't think of off the top of my head. But this has been great, Akeel. If people want to, reach out to you, maybe they feel like your firm is a good fit for a potential acquisition. What's the best way to get a hold of you?
You can hit me up on LinkedIn or just check out our website, horizencapital.com. So
I'll put that in the show notes too.
All right, perfect. Yeah, just reach out. We'll see. We'll check it out, see if it's a good fit, and see if we can work together.
Good, Akeel. So good catching up, and appreciate your time.
No, thank you. It was a pleasure, Andrew.
Cheers.
Cheers.